Hello folks, I'm L.A. Little, and this is your daily TA Wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what has to be one of the most beautiful places, the Rocky Mountains. Folks, glad you could join me. I got a nice show for you tonight here. We're going to take a look at what this market's doing. What is it doing? Well, it's doing nothing, right? It doesn't want to go down, doesn't want to go up. Just keeps hanging. Hanging is the name of the game with this market. Now, when you hang, you're doing consolidation or distribution. It's always a question of which one it is. That question rages in the technical circles nowadays. I see reference to it. I read a lot and I see reference to it all the time of late. Every time you get these kind of periods where the market marks time, people are going to debate both sides. They're going to say, oh, the sentiment is this, or the stocks that are leading are that, or the leading sectors are not leading anymore, or whatever it is, right? That's what they're going to look at. And they all have their own systems, and I'm not here to bunk their systems. I have my own, and I'm sure they're I would appreciate it if they didn't bunk mine, but I'm sure some of them do. But that's not the issue. The issue is which one is it? And I believe the way you tell that is through test. And the test is what's going to give us an idea of which one it is when it's time. Let's look at the ending numbers real quick. Let's pop into the charts. 15,451 was the Dow, up 31. We had the S&Ps up almost 5, 1694, 16. Or 18 actually, or is that 16? It looks like 16. My eyes are getting too old, folks. This actually got over that 1691 area. That's kind of a critical area. The 87 to 91 area was kind of a critical area. It's back over that area. It went in again, and we'll look at it on the chart. Went in again, tested one more time into that big bar, and held it again. Composite up 14, almost 15. 14 and a half. 3684 and a half. NDX 15 higher, 3141. Folks, that was Apple. It was Icon coming in, telling us that he's got a large stake. It's amazing. This is like the robber barons of old. I saw my friend Jason Levitt say something about. I didn't read his article, but he put out an article about the modern day pump and dump. I mean, if you're big, if you got a name, you can move stocks. But we've seen that before. Icon's just the latest. I remember when Granville moved markets, walking on water and stuff. It happens. People become big. They become famous. They can tweet something nowadays and they can move a market like that. Used to, the tweet was some sort of a news break. The networks had the monopoly on that. Anymore, one can just simply move over, type a few lines, or a couple of lines. You don't get few lines in Twitter. A couple lines, and boom, market takes off. And if you're wondering what I'm talking about, here's Apple. 31 million shares today, just zooms higher, breaks over this. Thing's going to try to get to 519 or so at this point. You can see it intraday. This is Icon making his tweet. A little build up all day long, and then his tweet comes out, and this thing just skyrockets. That's what a tweet can do from a well-known name. Russell, flat. So if you look at this, Dow up 0.2, S&P's up almost 0.3, Russell down, NDX driving it. Apple's a huge weighting. Apple was up, percentage-wise today? 4.5, almost 4.75%. Thing is 20% of the NDX, folks. That's what was happening. Gold was down today, down a little bit more after hours. Oil, copper, I didn't see much happening here. Dollar was up 0.5%, 22.10. That thing was way oversold, finally got a bounce. I don't know if it's much more than a bounce. We'll see when we get to the chart. And talking about the charts, let's go look at them. So if we pop over, pull up the S&Ps on the TA Today chart so we can see what's happening. What do we do? Okay, so this was the breakout bar. We've been watching this for what, a week now, week and a half? Breakout bar Thursday a week ago. You get a push up, You can't hold, you slide back down, you come back in and you test against this high over and over. This is the 4th time now. Volume expanded slightly today, not much. You're back up into the resistance. You're gonna sit here and keep testing. I suspect tomorrow is gonna be a repeat of today. They're gonna take it down, they're gonna take it up. And that's all they're doing. There's no read here, in my opinion, to tell you which way this market's gonna break. If I have to make a guess, I have to lean to the long side. Why? Because A, the trend is that way. You know, if we pull over a weekly chart and look at it, the trend is definitely to the upside, right? That's fairly clear. And matter of fact, if we pull over the cube, it will definitely tell you that, right? You're bullish across all time frames. So it's fairly clear that this market wants to go higher, or at least the trend is higher, I should say. So if you have to lean and you have to guess wrong, you want to guess at least with the trend, and that's what most people do. So that's that scenario. Let's see if any of the others, I don't think any of them are going to tell us anything, but I may be wrong. Let's see what they look like. And I've gotten to where I just do this show, in case you didn't realize it, and you probably do, I've gotten to where I just simply do this show live with you and read these charts with you instead of preparing. So sometimes I find surprises in them. Okay, so the Dow. Now the Dow has been the weakest. Dow came into support zone. It's coming off this high, this swing point high, and it looks like it's anchored on the other side by this swing point high's low. And then we got other ones underneath. Okay, so the high here is 15,340, 15,342, 15,346. Volume there was 811, and here was 847. So you actually hit into this with a little bit more volume, and there's no volume over there. It's 992. So again, that's a toss-up. I mean, it's hitting it with enough volume to try to get into it. It did hit with more volume, even though it flipped around. That also looks like a toss-up. So no read there. IXIC, the NASDAQ. Okay, so the NASDAQ got a push, right? Apple being the main instigator of the push. So the high was 3691, 3690, 14.4, 16.4. NASDAQ's going to test the highs. It's not that far away. It's going to test the highs. 36.94. And it's 10 points back. So the NASDAQ reads higher. Now remember, this is interesting because remember on the weekly show 2 nights back on Sunday, I do a weekly show on Sunday. On the weekly show, let me go grab the chart. Yeah, here it is. On the weekly show, we saw an over-under 2-bar reversal on the weekly on the NASDAQ, right? That typically says you're going to get some sort of a sideways to lower trade on the next bar. And the next bar, of course, is this week. So given that read, kind of looks to me like this market from that perspective is probably going to see a test failure of the highs or potentially get over them and then come right back based on the weekly read. NDX. All right, so the NDX actually goes up to test the high. 31.45 and a quarter. We got the 31.49, closed at 31.41. You did 16.4 into 14.7. Okay, so it's a failure on price, but not on volume. It's going to test again, and it's probably going to test again as the NASDAQ, excuse me, as the NASDAQ does its attempt to test. So this looks like, certainly from the tech sector, another test coming tomorrow. IWM. Okay, so the IWM yesterday, you know, was down here flirting with a swing point low, trying to get into it, never did. Flipped around, no volume. Today, no volume, just sideways trade. The highs went up 463. You got over it. You did 18.9, 18.6, 18.96, 18.92. So that tells me nothing. That looks just like the SPX. Basically, you're down here, you can't get out of this and you can't get over it. And again, I think we talked about this last night. You know, if you're a technician of this TA school, you know, the classical TA school, that sure looks like a head and shoulders. If you think about what it means to have a head and shoulders, you know, clearly the head and shoulders pattern you can see. What Edwards and McGee always talked about was volume on the left side, right? And you don't have that here, right? But a lot of folks, you know, less volume on the top, less volume on the right side. If anything, you have a stretch to get that here. You barely have it, if anything. Even if it is, and you take that measurement, right? The measurement, you know, notice a lot of these, you know, one of the things I've thought about before is doing some sort of a history of TA, because a lot of these things complement each other. For example, the ABCD patterns you see me looking at all the time, it's basically the same count as a head and shoulders. In other words, you take the top, well, it's not quite the same count, but it's a little different in that it's a smaller count than you would get from the head and shoulders, but they complement each other in that the B point becomes the same as the neckline, right? And so the B is here. So if I do the head and shoulders and believe that would be 105.63 down to here. What is that, about 263? That would take you down to 100 and something. That would take you right down in this high. That's the head and shoulders move. If you do the ABCD, you got 105.63. You got over it today, yeah. So you got a higher high on the bounce. So that's 105.63. That's about 230. And just assuming it dies right here and comes back, that would take you to 102.50. And that's right back in about 10. Is it 102.50? Is that right? No, 102, which would take you right back into that gap. And I suspect you're going to find some support at that gap. So I typically don't anymore. I never look at head and shoulders really, other than to see them. But that, you know, the gap is the area here still. So if we see a break, the gap's what it's going to shoot for. It's not telling us that yet. None of them are. Now what they are doing is they're setting up for moves. Okay, for example, now you have a swing point low here. Tomorrow this is going to print swing point low because you just did 6 bars. So you're going to have, swing point high. You're going to have a swing point high sitting above and low. When you get that setup, a break of it, of course, is the breakout. And that's where the stops will be sitting. Because why do they sit after 6 bars? Well, because there's been enough time. You know, these numbers really aren't arbitrary. They work because they make sense from these various perspectives in terms of the way people trade. I'm going to pop back over. The SPX is probably going to print too, isn't it? 107.9, yeah, so this one will print tomorrow as well. So that's what's happening. We're going to have setups now to where we can get measurements once we get a break or we get a push to one side or the other. And then that's going to give you the next move, right? That's how we're going to have our tea leaves so that we can read them. All right, so let's pop into, let's go to the sectors. Let me pop into the sector charts. So the major sectors, given the day-to-day, other than the XLK, I suspect they're going to be nothing. Okay, so IYT still struggling, can't move. Can't get a break on the ABCD down, just hanging. XLB was trying to get out the top. It's up there to do the test. Okay, it looks like it almost did it. Not quite. 41.61, 41.59. Gonna test tomorrow maybe. It's climbing up there ever so slowly to get the test. And that test should fail given the volume coming into it, the way it's trading. XLE, can't break down, can't do an ABCD down, just hanging. Market doesn't know what it wants to do. Now the XLF tested into that swing point high again. That's a retest, regen that's going on. This is the first time, 2 bars now, no volume. Actually less volume than yesterday, got lower than yesterday, flipped around. This one's going to bounce a little bit now. So you retested in, you couldn't break it down, now you're going to get your bounce. You'll probably bounce up into this resistance area. I would think your target would be the bottom of the swing point high. That is 2066. You're trading at 2046, so roughly 1%. XLI. Okay, so the XLI is pushing into resistance. Now this one, if I remember right, also had, no, it didn't have the failure on the weekly. Okay, I just, this one's got a swing point high as well now, and it looks to me like it's going to do everything it can to get right back up there and test it. XLK should have broken out today, and it did. Okay, so now this one's interesting. So now you've got, tomorrow this is going to register as a breakout. It's going to be another suspect breakout, it looks like to me. Yeah. So another suspect breakout or another swing point high. And the weekly, what does the weekly look like? This is the leading sector right now at this particular time frame. At this particular time in point in time. Okay, there's no way this is going to have the volume. You can see the way it's leading up here. Yeah, there's just no volume. So a key by the end of the week is, can you stretch away from this? 32.31 is the high. If you can stretch away from it, you're going to have multiple swing point breaks on multiple time frames, and that can lead to a fast move up. We've already talked about Apple can make it to 520. That's another 20 points almost. Let's go back to Apple right quick and look at it. 89, it can get up 20 points from here. So this is a big number on the XLK this week. This bleeds bullish if it can hold. We're going to have to watch that one carefully. So right now, that's a feather in the cap of the bulls. XLP still can't do anything, and it's biding time. It's going to bide time for another month or two probably, unless the whole market takes off. XLU can't break down. Oh, so familiar, huh? It's breaking a swing point low. It's going to change trend to sideways. So here's the first one breaking on the downside again. That low is 38.83. Yeah, it's underneath it. So XLU looks to be done on the upside probably. XLV. And ever since this one did its 2-bar reversal, it's just been bleeding lower. But, again, here, you can't even get back to test the support zone. 50.40. 50.44. This one's going to keep working its way back and try to get into that support zone. So I don't see anything here on the sectors that's telling us anything significant other than weakness in the utilities. That's a trend transition lower, and strength in the technology sector, which is driving this market right now, and that's the XLK. XLY is still hanging as well. Looks like the SPX. Let's look at the OX markets right quick and see what's there. Okay, so let's actually start with the dollar, since the dollar's trying to push higher, but it's struggling. Okay, so you got a doji. What is this doing? So $22.18, $22.14. Well, that actually looks like a failure at the top of resistance, because it went into 1.4 million shares. Yeah, 1.4 million went into it at 864. It looks to me like the dollar is going to come back and test probably the bottom of this large wide candle from June 6th. Remember, on a bunch of these currencies, June 6th still is the pivotal date, and it keeps playing havoc with all of these. So dollar can trade back to 22 pretty easy. Let's see if the FXE, FXY look to gather themselves. Both of them sold off lately. FXE is coming back into 131.16. Got into it, closed over it, did 226 into, yeah, this one wants to bounce. It's going to have resistance right there tomorrow, but it wants to bounce. Again, the June 6th high is where it wants to get back up to, 131.85. And the yen, Uncle Abe and the disaster yen. Let's see. Talk about a disaster. Look at that fall. So they talked about last night tax cuts for businesses. The market went ape wild. And the June 6th is the number here again, the low of it, 98.66. That's where it's trying to get. So you're going to have weakness in the yen still, more than likely. Some strength in the euro. That's going to keep the dollar from collapsing again, but fade back in. Bonds. So bonds come down to test the lows one more time. How many times have they done this? 105 was the low. We got underneath it today. We closed over it. Lower volume. That's a test failure on the lows, folks. That's a hold of support. This thing's going to try to flip around now. It's been trying to build a base. It's taken forever here, but it's trying to build one. It's just exhausted down here. I mean, the sellers keep, just look at your sellers. They keep drying up as we keep coming lower and lower. In other words, if you see volume drying up like this, what does it tell you? Well, I'm not willing to sell my shares at lower and lower prices. Well, if you're not willing to sell them, what's going to happen? Well, there's going to be more buyers than sellers at some point, and that's slowly what's taking over here. So look for the bonds to try to flip around and go back the other way. Let's go look at gold. Gold was a big spike up yesterday, you remember. Today spikes right back down. Took about half of it away. Okay, so the anchor zone, top of it is 127.59. It closed at 127.75, got into it, flipped around. Let's see, volume there was 6.2 going into 10.8. That looks like a pretty good test at support. Look for the gold to try to flip around and go back up tomorrow. Let's see what silver did. Silver had the big spike up to catch up with gold, and look at that, it held. So I would think you're going to see tomorrow gold flip around. Silver's going to push up into this bar finally. 2081, it's at 2072, got as high as 76. I think you're going to see that test tomorrow on silver. Oil. So the oil market just stretches back up into resistance. Now, I don't see anything here. It looks to me like you can actually get back up and test that swing point high in resistance. So not much of a read on that one. JJC. And okay, so you're seeing commodities come into favor instead of out of favor, which is what has been happening for so long. And so the situation here, to me, is what you're seeing strength come into commodities as a result of the Chinese situation. And if we flip over and look at the Chinese, I haven't looked at it today, we'll do that in a second. What you're seeing is money coming out of the government, the Central Bank of China, and pushing into the system again, just like us. It's basically QE, just in a different form, to drive consumption, not so much consumption, but investment through loans. And that's pushing all these commodities higher, pushing every one of them higher. What the Chinese love to do is drive these things lower, like copper, boatloads of it, buy it, right, store it in their warehouses, and then unleash the investment capital and push the markets back up and use all that copper they got on the cheap. They do it with silver, they do it with copper, they do it with everything. And this looks like another classic example of it. Let's see what, I haven't looked at UNL in a while, natural gas. Maybe that's why we haven't looked at it. I don't see anything interesting there. It's tested on the weekly though, that's kind of interesting. So here's the test. Remember we were talking about to come down and do the test? Well, it did the test, folks. When it was up here, I don't think anybody would have believed me that it would come all the way back down, but it has. That is a 25% loss if you rode it all the way back. 1607, 1618, got as low as 16 excuse me, 1575, closed at 1613 on the weekly. So it broke that one, and then it broke this one. It hasn't broke that one, 1607. It doesn't have the volume. Let me look at UNG right quick. Let me pop up the UNG chart. It's a front month, but it has more volume. Let me see what it's doing. Wow. So this one broke on multiple time frames. Well, the first thing when I see that is I wouldn't touch it. I would just stay away from it. Looks to me like it's going to go lower. Okay, so that's that. What else I got here? Oh, the last one is the J and K, the junk bonds. Let me quickly look at those guys. And actually, I'll look at the commodities and the RJA as well. Junk bonds just hanging. It's not healthy, but it's not horrible. Let me see what the commodities are doing. I'm going to go to the broadest one, RJA. Big spike up. I believe that was a grain report that spiked them. You can probably see that more clearly on the DBA. Yeah, so that's the first time I've seen buyers really come into this thing, right? The problem is, just like we saw it back here, you know, and they sold it the same day, here you're selling it the next day. That's just a sign of a very weak market struggling to get a turn. This is going to turn finally, it looks like, but it's going to play out over a long period of time. So that's what's happening there. Let me go over to the if you got questions, type them in. I got a couple minutes. Actually, I need to answer one question real quick. But before I forget, I want to look real quickly at where is my watch list there. World markets. I want to look at the FXI, the FXI, HSI, Hong Kong. Let me see what Hong Kong did. Yeah, so it got over it. Got over the swing point high. Volume is expanding. This thing's going higher. Let's look at Brazil. We were talking about it last night. Yeah, and it's starting to push higher. Brazil is going to push up into that zone. Not seeing it in the ETF yet, but that's what's happening. Okay, let's quickly take the question that was emailed. There was a question about Apple and the sector that Apple shows up in. So let me bring Apple up on the TA Today charts. The question is why does Apple show up in the XLY? Well, it shows up in the XLY because it really sells more retail stuff now than it does in terms of the technology, and so it's kind of been reclassified, and so it shows up as XLY as a result of that. You could easily argue, you know, a lot of these companies, and actually, you know, one of the things we're going to do one of these days is we're going to break this market up into multiple sectors where stocks don't have to fit in quote-unquote one sector, and Apple's clearly fits in a couple at least. And there's a lot of conglomerations that fit in many sectors, right? Defense, tools, industrials. You know, I mean, look at GE. It's financials, industrials. You can go on and on. So a lot of these companies, they bleed into, especially the large ones, right? They bleed into multiple markets. They're not single markets. And so one of the things we should do at some point is to factor that in. And you know, how we do that and when we do that, we'll have to see. But that's certainly one idea to go forward. So that's the answer to that. And then I had one other quick one. Let me get it. Question was about the XLF and the KRE, I believe. So let me get those two in here and look at them real quick. KBE, right? Yeah, KBE. So KBE, XLF, and let me see what the question was. So the question was, am I giving some value to the fact that the XLF did not make a new high on 8/1, but actually the KBE did make a new high. So the banks are confirming the move. It may be significant for the XLF. So the question is the XLF really telling us this market's going to break down, right? Because it made a lower high. It's divergent. Or do we believe the KBE is telling us the truth, right? Because it actually made a higher high. You know, I don't have the answer. I didn't read this until a little bit late today. So what I'm going to do is I'm going to keep this question for tomorrow night's show. I'll do a little bit of work on it here after I get off the air. And what I'll do is I'll come back to this tomorrow because what I need to do is see what the makeup is of the KBE, what's in it. And then once I do that, then I can make a more informed answer with respect to the question. If it's a broader one, it probably is a good thing, right? If it's narrow, just like the XLF, where most of the concentration is in a few large names, then I probably wouldn't put much more weight on it than I do the XLF in terms of which one's best. So let me do that homework tomorrow, and then I'll get back to you. All right, I'm going to leave it at that, folks. So what we got is a mixed market, just like we've had. Nothing has changed. So what we're going to do tomorrow is see, and actually the rest of this week, is see if the XLF tried to flip around today. We got technology trying to, well, it's already breaking out. Can it break out on multiple time frames? Those will be the big test. And do we see the XLE, XLI, all those other sectors try to pull back in and give us a clue? Right now, you got to lean long if you're leaning, folks. Have yourself a great one. Take care. And until next time, I'm L.A. Little, and this is and was your daily TA Wrap. Have a great one. Good night, folks.